Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today is Monday the 22nd of May 2017. Hope you had a nice weekend, and unfortunately typical Monday, fairly slim pickings on the news wires. The charts are all basically not moving very far, and yeah, typical for a Monday I'm afraid. But we'll see how the day develops. I'm interested to see how long this dollar weakness continues for. It's really only sentiment though. The good news about sentiment is that it does subside at some stage. Sentiment can be very short-lived, can be 5 minutes, 5 seconds, sometimes a session, sometimes a day, sometimes multiple days, sometimes weeks, even months in some cases when it's strong. And for all, you can jump on sentiment if you wish. It's not my thing really. I prefer to be pretty grounded and pretty dogged to my my fundamental opinion, and my fundamental opinion of the US dollar is still I want to be a buyer of the dollar. I'm a dollar bull for sure. However, that doesn't change the fact that sentiment can't crush you on the short term. It doesn't matter about that fundamental bias if you time it wrong. The benefit of not getting drawn into the hoopla around sentiment, and you can trade sentiment, I'm just saying if you're trying to trade those fundamental biases as longer term trends, is that ultimately sentiment does something fantastic for the fundamental trader, and that is, you know, this is retail prices. You don't want to be buying and selling at retail prices, so we don't want to buy dollars up here, but we do potentially want to buy dollars lower down, right? And that's a good thing. Now, sentiment is what draws price to us, amongst other things. You can have profit taking, etc., but sometimes that it goes beyond that. And in the case of the dollar, obviously with the FBI Comey investigation and the whole Trump impeachment thing, it's strong sentiment, but it's not. It doesn't change the fundamentals per se. So. But the problem is sentiment will crush you irrespective of your fundamental bias if you time it wrong. The benefit of having that fundamental bias and allowing the sentiment to work for you is that it brings price to you and makes it more cheap. Right down here is wholesale prices, right, trade prices, and that's a good thing. But it's the sentiment that draws it to these locations. The problem is that, as I say, if you mistime that, you know, it doesn't matter about your fundamental bias. Strong sentiment can crush you. So, but this is starting to get interesting. Price moved away from this area and went on to make some new highs. It's interesting though for a few more reasons than that. It doesn't look that interesting when you first glance. But dropping down onto the 30-minute chart, the reason why I'm interested in this is it is a trap, but it's also it's what happened prior to it that intrigues me somewhat. We've got this level where price has touched it several times, right? Support loads of times, probably more than I can get up here. Yeah, there we go, not too bad. Been touched loads of times in a trend, and what would happen is these traders would place their stops just below these swings, okay, because the people are trying to manage risk, and there would be a build-up of liquidity under that level. Now, trends can't continue forever without some type of deep retracement. So imagine that's like the perfect trend image. Well, what you'll have is sometimes you'll have an image like this, and price will drop down and hurt those people who were trading the trend in the normal sense, and then continue higher, hoovering up their stop losses as it continues higher. It needs fuel to continue. Can't just keep going in straight lines. Now this is fuel. Now people might think that, you know, every time price bounces off here, is there really a build-up of stop losses? Because surely, you know, these people are making money and they go and their orders don't reside under the level anymore. It's not true, because if you think about it, yes, people do make money, and you would imagine some of them, you know, disappear and take their orders with them. But there's also a lot of people who don't do that and who get greedy. And what that means is that when price originally had, let me just highlight this one area. Let's say this was the first touch, right? And this is where the initial stop losses were. I know it was touched there too, but this is probably the first main time people traded it. The stop losses that are in here will be fewer than the stop losses in here, and will be fewer than the stop losses in here and in here. And the reason is people believe that the more levels touch, the stronger it gets. It's not true, but that's what people believe. And people are greedy, as I mentioned. So whoever was able to pick off this trade, there was some of them. Obviously, let's imagine this was the stop losses below the level. There's some of them who made money, you know, just trading crossover to those highs, you know, and they vanished and they took the money and they ran, right? But some of them will be greedy and they'll hold on to those trades. Now, when price comes back into that level, their orders are still at that level, right? It's not that it's not carrying over to this area. It doesn't need to. It's the same price point. So those orders start to accumulate above and below these locations. So as it's touched, the more it's touched, the more obvious it becomes. More obvious it becomes, more people see it. More people see it, more people trade it. And people believe the more levels touch, the stronger it gets. So when you get to a situation where it's touched, like, you know, 1, 2, I know it's touched more than this, but just for quickness, right, 6 times, something like that, there's going to be more stop loss orders building below those levels because of that effect of people remaining in those trades who got greedy and didn't exit. So there's an accumulation, plus the people taking the trades as well. So a level does build in terms of a target for liquidity. It does build in terms of liquidity as it goes forward. Now, what was this move? There's essentially a massive stop hunt that occurred there, hoovered up all those stops, and then boom, off to new highs it went. So it trapped traders who believed this was going to pay them. The stops were below the level, nailed all the stops that were there and then some, and then, you know, something big was able to do some buying in here. And that's why I'm interested in buying in this area, because something big saw this as a good place to get long dollar CAD, and now we're going to be coming back. You know, we're coming back into this this level. Not only that, there's a bit of a trap in there as well, structure failure. So there'll been a few people who went short late and then got caught as well. They'll be bailing out as price comes back into that level. So net, this looks pretty interesting. It's a little bit different to what I'm usually discussing with you guys, but hopefully you found that helpful. And if you'd like to come and join me in my brand new inner circle, click the link below and I'll see you on the inside.